Chapter 15, Fortitude Fails. It was Christmas Eve, and Adam was surfing in Hawaii, blissfully unaware that Project Fortitude was collapsing. Masa had intended to invest $20 billion into WeWork, primarily using funds from the Vision Fund. However, two of the fund's biggest backers, Saudi Arabia and Abu Dhabi, refused to allow any more money to be invested in WeWork. Though they had trusted Masa to lead investments in innovative tech companies, they retained veto power on deals exceeding $3 billion, and this deal qualified. As a result, Masa would have to fund the investment directly through SoftBank. Although SoftBank had significant capital, it didn't have $20 billion readily available. Worse, a series of unfortunate events was unfolding for Masa. The public markets had turned cautious, stock prices were falling globally, and SoftBank's own stock had dropped by a third in just a few months. Further decline could trigger lenders to demand repayment on loans, draining SoftBank's cash and potentially sending it into a downward spiral. Adding to the trouble, SoftBank's Japanese mobile arm went public around this time. Masa had hoped this IPO would raise substantial funds, but the stock crashed on its first day, losing $3 billion, one of the worst debuts ever. Masa was warned that another risky move, like investing heavily in WeWork, could cause SoftBank's stock to tumble further. It became clear the $20 billion deal was no longer viable. That Christmas Eve, Adam's phone rang. It was Masa, delivering the devastating news: Project Fortitude was dead. Adam's heart sank. He couldn't believe what he was hearing. Adam immediately flew out to meet Masa, desperate to change his mind. But Masa still wanted to do the deal, he simply couldn't. The market collapse and other investors pulling out made it impossible. Adam was crushed, feeling betrayed by the man he had come to see as a father figure. From this point on, Adam's behavior became even more erratic. Still, SoftBank couldn't walk away completely. WeWork was burning cash at an alarming rate, and SoftBank was already too deeply involved to let it collapse. They also needed to save face, so Masa agreed to invest $2 billion, a far cry from the promised $20 billion. Though it was a consolation prize, WeWork still needed to secure more money. Shortly after, Adam tried to control the narrative. He roped in his celebrity friend Ashton Kutcher for a CNBC interview, trying to convince the world everything was fine. Ashton emphasized that with $10 billion already invested, the idea that SoftBank lacked confidence in WeWork was absurd. "I have confidence in the company," he said. Interestingly, Ashton wasn't even invested in WeWork. Initially skeptical about whether it was truly a tech company, he later claimed to see its potential. "I realized that through the technology this company has, it can close the gap between the haves and the have-nots." Despite their efforts to spin the story, it was obvious Adam was under immense stress, lacking his usual energy. Publicly, he claimed WeWork had 5 years of runway and didn't need SoftBank's $20 billion. This was a lie. In truth, they were months away from running out of cash due to their reckless spending. Internally, WeWork employees were growing concerned. Around the same time, a documentary about Theranos aired, a startup that raised vast amounts of money only to be exposed as a fraud. Employees couldn't help but draw eerie parallels. To be fair, there was a fundamental difference. Theranos' product never worked, while WeWork offered a service people genuinely liked. But the question remained, could it ever be profitable? Chapter 16, The Shocking Economics of WeWork. By December, WeWork was opening 79 new locations, more than in its first 6 years combined. By the end of 2018, WeWork had become the largest private tenant in New York City. Typically, larger companies benefit from economies of scale, buying in bulk to reduce costs. Yet WeWork defied this logic. The bigger they grew, the more they spent. Driven by relentless growth targets, the team began wildly overpaying for leases. Waste became rampant. One example was their handling of office furniture. At one point, they bulk ordered orange couches from China to save costs and store for future use. However, when it came time to furnish new offices, they often decided the orange couches no longer fit the aesthetic or color scheme. This led to last-minute purchases of new couches at retail prices, sometimes with costly expedited shipping. Meanwhile, the original couches sat in storage, eventually discarded. Rapid expansion also led to inefficiency. Multiple teams often duplicated efforts, sometimes with 3 different groups working on the same project. While Adam occasionally demanded spending cuts, executives warned this would hurt revenue growth, so budgets remained inflated. One of the biggest drains was WeWork's obsession with portraying itself as a tech company. They hired 1,500 people for tech projects, all on high salaries. But there was no clear strategy, just a mix of scattered, unrelated ideas. For instance, they had a dedicated AI team designing sensors for offices, promising valuable insights into workspace usage. But the results were laughably obvious, like discovering long lines at coffee stations and recommending hiring another barista. Observations anyone could make simply by looking around. By early 2019, WeWork was operating in 27 countries, with 425 locations and over 400,000 members. From the outside, it looked like a thriving success story. Inside, however, the reality was dire. WeWork was set to run out of money before the year's end. No private investor remained capable of providing the massive capital Adam needed. SoftBank pulling back only worsened investor confidence. There was only one option left: going public. Taking WeWork to the stock market meant revealing the company's financials and opening themselves up to scrutiny, something Adam desperately wanted to avoid. But by then, he had no choice.